Hello, fellow traders. 'Tis I, the Rumpled One. It is Friday, May the 25th, year 2018. Let's talk trading. Why you do not get better at trading, part 5. I had a comment that in the notes or in the subject, I should tell what each part talks about. So if you look down here and you click on more, it'll tell you the subject for each of the parts. So thank you for that suggestion, fellow trader. Okay, so on Monday, we talked about you're not trading enough and you're not trading consistently. Enough doesn't mean the number of trades, but it means more. You set a time of day. Maybe it's a half hour, maybe it's an hour, maybe it's a 4-hour block, but you do that consistently. And while you're trading, you're focused on trading. Then the next day we talked about the shiny object syndrome. You just jump on that latest indicator. I think the hot one now out there, everybody's or I keep getting the email almost on a daily basis, the slope divergence indicator with the dashboard or something. Then the next one, you have to trade step by step in the correct order. Are you doing that? Yesterday we talked about you don't know what to trade and you don't know how to trade, and that included technique, timing, chart visualization, what type of trade or study that you do, whether it's trend trading, support, resistance, etc. And you have to learn the language. If you don't know the language of trading, it's going to be really tough for you to get better at it. Now today, what we're going to talk about, and it's going to kind of wrap it up, is that you're not practically applying what you are learning. In other words, if you've been watching my videos and you see the different methods and you see one you like, if you're not practically applying it, then you're not going to get better. It's not just enough to watch the videos and to read. You have to take notes, and we talked about those little knowledge bombs, and every now and then a trader will send an email to me or call me up or something and tell me, it's like, you know what, I finally get it. I feel good about that. That means I helped a fellow trader. But it's that, you just have to stick to it. You have to apply it. And applying means you have to use it. You have to do it, not just watch it. It's, as I always say, it's just that simple. And going along with that, you don't need to learn another indicator or another method or another system. You probably already have something that if you would just practically apply it, you'd get better at it. Okay, so whatever it is you know, you need to apply it. And along those lines, what you have to do is you have to focus on improving what you do and not obsessing or stressing over the result or the outcome. So in other words, if you're trading something as simple as the buy zone and you do it a couple of times and you take a couple of hits, don't give up. Losing is part of the game, okay? Because if you stick to it, as we see day after day, you're going to get that one that'll make up for the losses and then some, or it might take two. But if you stick to it, if you just keep doing it over and over and you just focus on that one little technique, whichever one it is, I just picked the buy zone because that's one of the first ones I came up with, then you will start to see the results. But you're not focused on the results. You're focused on the process. You're focused on doing what you need to do to the best of your abilities. And then you want to even make your abilities better because you keep doing it more and more. So let's just dive right in. So the first thing, you want to make sure you're doing money and risk management to the best of your abilities. You're doing it consistently, okay? In other words, every trade, you're going to make sure that you have the appropriate risk. Now, some cases you might want to change the risk, but if you're just starting out or if you're struggling, you're not profitable, you're just kind of floundering, then let's just leave the risk alone. You set a $1% amount that you're willing to lose, you stick to it. So if that's a dollar and you're trading a dime a pip, so the biggest stop is going to be 10 pips, okay, that's fine. Do it. And then when you start to win at that level, all you have to do is then start, bumping up that position size, okay, which will increase your risk slightly, okay, or it's going to narrow your stop loss. So if you want to keep that 10 pip stop loss and you start bumping your position size, just remember your risk is going to be going up. And that's okay, but you have to stay focused. So let's look at here. As we can see, we look here, we still have 3 that failed to fill the weekly gap, and that's okay, because look at all these others. So basically, if you took all these trades, I do believe you'd be ahead of the game by a nice amount. Once again here, we can see it entered the upper wick zone, shot out the top, came back in, shot out the bottom, broke out the lower wick zone, which really isn't much, and you can see here it's coming back up. And if we look at the daily, you see we didn't make a lower low here, and we didn't make a higher high. We got an inside bar, and it's looking like a doji right now. Okay, so this should be a very interesting trade. And you can see right here, we're right around the open, so we're taking that daily open cross, either up or down, long or short. And here we look at the buy zone, and let's just for the heck of it, let's spread it out to M1. And so you can see what kind of price action you would have had. Okay, here, that's a loss because it came here or here, but you can see what happened next. Okay, if you're just trading in the buy zone right here, you can see you had a chance to get in, and there's more profit there. Okay, right here, if you got in, you would have probably taken a loss right there. If you would have jumped in, you would have probably scratched that trade. That's if you're trading on the M1. But if you stick to the H1, you see here, that should have been a winner had you entered. You don't want to give it all back. You see right here, you enter the zone. If you stopped out here, right there, yes, that would have been a loss. But you enter again here, and you more than make it up. That's not a trade. That's not a trade. This one would have either been a scratch or a loss. This one is a scratch or a loss. It's that simple. But you see, if you stick with the process, right here, that's the one you're looking for. That's the one we all want, is that big run. And it's simple. You just have to do it. No squiggly line indicators were harmed in the making of this method. I love saying that. And you see here, if you faded the pivot, you wouldn't even have taken that trade if you were looking for that pivot. And here, rat zone, right here, time to get in. If you want to get in, right there, 109.25. See, there was a nice run out of the rat zone right there. And I missed it because I was busy setting up to make this video. I had already popped out. But you can see here's opportunity. We're coming up to the, I'll tell you what, let's just do that. I usually don't do that live, but I just clicked on buy for a about $1 a pip, and let's just see what happens. Okay, we already saw that it hit the pivot and cleared. Price action. 2 ball, red at the line, money to be made. 1 ball, green at the line, money to be made. 1 ball, red at the line. 2 ball, green at the line. Once again, if you like this method, this simple method, this is how you do it. Okay? This is simple, but you stick to it. You just make sure every trade you trade according to what your trade trigger tells you to do. Okay? You trade accordingly. And as you can see here, we are coming out of the rat zone by a couple of pips. Okay? Once again here, if you like the H1, that rule of thumb, don't trade against the candle color. You trade with the candle color at the line. You can see here that would have been a loser. Right here, though, you might have been in this trade, and so you might have stuck in it, and that'd be a big winner. You know, right here, you may have scratched that trade. You may have stuck in. There's a winner. Okay, that would have been a winner if you held on. Then you came back the other way. Winner. Winner if you just woke up an hour or so ago. And right here we have another win. Okay, see, I knew about this price. That's one of the reasons why I jumped in live during the process. You see here, that level is appearing on different charts. Here we got the wick zone again. Okay. And here we have a holo trade right here. Why is that on the screen? That's not supposed to be. So we had a lowest open right there. You see what happened with the highest open? It touched it all the way down. Once again, using the tick chart, you see here, we crossed above the valley of the ask, and we're up a few pips. And right here, you can see I've got one of my trade screens here, and you can see I'm up a few pips. And we see we took out the pivot. There's still a missed pivot. And the IRBs, we're coming up to an area where we should short. And then there's another area where we would go long right there. So you see, fellow traders, as I've said, at the end of every video, it's not what you trade, it's how you trade it. So let me know if you think I should turn this into a book, because I can go into each one of these days of what I did, more in depth. Maybe I'll just have to do more videos on it and because almost each one I could probably spend a week on, especially this not practically applying what you are learning. So maybe you can take some notes. In the meantime, watch them a couple of times. Remember, you come down here, you subscribe, and you hit that little bell, so every time I put a video out, you get notified. And if you've got questions, either put them on the videos or go over to where I post, and you guys know that, or you can stick it on the Facebook, and I'll answer your questions. I'll try and answer them in the video so everybody who watches gets to hear the answers. So remember, focus on improving instead of obsessing over the result. It's not that every trade has to be a winner. No, make sure you enter when you're supposed to, exit when you're supposed to. Because it is not what you trade, it's how you trade it. TheRumpledOne signing off to drain the bank some more and then enjoy the weekend, and I hope you do too.